Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar found a little bit more weakness in today's session after China figures come out that the GDP dropped from 4.8 from the previous month, missing the forecast of 1.2 and coming at 0.4, which is relatively low, as retail sales though improved from negative 6.7 to 3.1. In other numbers, they were relatively well, considering that the industrial production for year on year was 3.9, and also the fixed asset investment came in at 6.1, pretty much on target. Looking at the Australian dollar though, we can see the market is still respecting that key level around 66, 60, 65. And while intact, I do anticipate that we should see further upside potential towards 67, 70, and then seen as minor, and then 68, 15, 45. It is only from there that a break will give us further indication to around about 68.90 to 69.5 cents. In light of the pattern, I'm not turning negative. At the bottom of this range here, there is divergence respectively from the MACD. So therefore, you can see from the whipsaw price action from overnight that we could eventually see a further rise towards that top side. Moving on to the euro, the market is still relatively firm above that level of 99.50 after taking a stab action and reversed very sharply, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, surged after the PPI came out, slightly hotter than expected. The dollar reached a high of 109.12 before dropping back to around 108.45. This saw the euro also whipsawed and ends from this New York close to a potential weak hammer. Now, with divergence in play here, I feel the market should continue to respect that level around 99.5 and look up towards the region of 100.55 to 101.30.40 to even maybe 102.20 and reassess from there. Well, with the figures coming out overnight, the US Labor Department producer that is, price index report on Thursday showed a hotter than expected inflation in June, as the annual producer inflation rose by 11.3 in June, much higher than the estimates of 10.7. Investors are now waiting for the US retail sales later tonight, which will likely set off another round of volatility, and traders at this point are betting that the US Federal Reserve will deliver another 75 basis point rate hike at their up-and-coming meeting that is on the 26th and 27th of July. Then it's assessed in September, possibly a 50 basis point. So in the light of that, we might see a little bit more in terms of potentially inflationary peak and a slight pullback in the US dollar. Looking at dollar yen, well, the market did reach its topside call, that is around 139.15.35. Although I was neutral all the way up, I gave a view for those that were trading that we could reach that area. And as you can see from today and overnight, the market is struggling at or above 139. If so, then we could see a little bit of a pullback that views support level around 138.45 to 137.30.60. There is a little bit of divergence in the RSI, a weak MACD. Therefore, could actually potentially see a small pullback, but still keeping a neutral outlook due to the ADX is still holding a bullish trend. So it's very difficult to come out with a strong call while you've got mixed oscillators. Sterling, like the euro, stabbed at the bottom side of the range around 118.15.30 and respectively came back above there from New York close. In light of the divergence here, I feel the market is still destined to reach the top side of 119.30 to 119.65 and reassess from there. As noted earlier in the week, a break above this level will give further scope up towards 120.65.75 and reassess. Sterling CAD was very whippy overnight, but did reach both sides of the range. That is, rejecting the bottom side around 153.75 to the base now seen around a little bit higher now. That comes in roughly at 154.80. In light of the top side challenge though, the market is still destined to probably increase its momentum and therefore look towards either 156.35.55, or if the sterling leg does get stronger, we could even see it up towards 157. As you can see, gold is still somewhat trekking lower and still poised for another down test, which could be anywhere from 1,706, which is where we pretty much are now, or even lower down to 1,686 to 91, where it stabbed close to there overnight. There is divergence in the RSI and in the MACD, so I'm not going to get too bearish at the bottom of the range. Most people do view when the market's selling off hard and get negative at the bottom. However, with a ADX overheating, I feel there is going to be eventually a snap to the upside. That is towards 1,726 to 33, or maybe as high around 1,748 to 53, where I've outlined it here. So I'm not getting negative here, and I feel there is a recovery very soon. The market staged a stab at the downside, close to a low around $88 a barrel, posting a weak Dragonfly Doji. They don't always come through bullish, but I am a little bit cautious due to the fact is the longer the wick, the stronger the case may be. And if so, with the divergence coming through here, could actually see a snap to the upside and look towards either 94.5, 95 or $97 a barrel. In light of the pattern though, if we see a close under $92 a barrel, reveals 85 to 86 once again. As I said, there is some divergence, so let's see how it all plays into the Friday session. Well, that wraps it for the week. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.